There we go. We got the recording going. So what's up, everybody? I am sitting down, first interview with Mr. Martin Metzdorf in Chandler, Arizona. He is a regional leader, and we're going to talk about what's working best for him, what kind of leadership he's bringing to our team. And it is April of 2023, still a pretty tough market. We're seeing rates start to come down, but I really want to hear what you're doing and how you're helping loan officers win in this market. So if you don't mind, Martin, just tell everybody a little bit about your backstory, your role, and then we'll get into big ideas.
Yeah, thanks for having me, Dave. So I've been on business about 23 years in the industry. I worked for credit unions, worked for banks, moved over to the mortgage banking side back in 2014, and have grown from, being a bank branch LO to self-sourced, and then turned that into being a top 1% LO in 17, 18, 19, and 20. And then from there moved into an area regional manager role with USA Mortgage. And I'm in the non-producing side. So now I'm, teaching our LOs how to use MortgageCoach and the tools that have made me successful over the years. And so we really with MortgageCoach, I love it, man. I've been an adopter of it since 2014. I always find it shocking when people say they don't use it, because it's been the one thing that I think of. If I look at one tool that has made my life easier to produce more and has made it easier to have effective conversations with people who are visual to see why they, should use one loan versus the next. And I know I'm not the lowest rate. So that's a little bit about my backstory and how I use MortgageCoach.
Cool. So I'm just going to start it with, what is working best right now for your top producers, and what are you really teaching and training on right now? What's working best?
Well, the thing that's working best is it's going to go back to some of the tried and true, which is going deep with our customer, really listening. We're having, whether it's phone conversations, eventually trying to get them on the phone, or having very simple, high-level conversations, or like a virtual conversation over email or text, to get them on the phone and walking them through what is their current goal, and then what's their pain in getting there. And then using MortgageCoach to show the solutions of how we can get them there, whether it be through our 2-1 or 3-2-1 buy down, our 5K closing guarantee, and or our cash offers program that we have in-house, which those are some things that really set us apart in the market. And so those are all great tools to have, but the number one thing that's working for my team is the discipline of spending time with each client to really dig in and needs assess family, occupation, recreation goals, and or dreams, if you want to afford them. That's really what's working. It's just tried and true. It's nothing sexy. It's just simple connecting with people. Yeah, and we talk about this in our sales meetings bi-monthly, and it's just being consistent in these habits.
Yeah, no doubt. Going deeper, identifying the problems, and delivering a solution. So give me an example of a problem solution that you're seeing your loan officers do and that you're teaching and training to right now.
Well, I mean, the biggest problem, I think every loan officer on this call can feel, that everyone's having payment shock. And it really comes down to, if we can talk them through that first bit of payment shock, which is, here's where the rates are today. The first thing, one of the big questions I harp on my team to ask is, has anybody ever sat down with a consumer and explained to them, why are interest rates where they're at and what's causing them to be there? And when they ask that question, 9 times out of 10, clients say, actually, I have no idea why rates are where they're at. And so as soon as we get that, they are literally opening up the door for us to come and sit down and have a very candid conversation with them about what's going on. We explain interest rates are temporary. We've all said, marry the house, date the rate. So it really allows us to get into that conversation, and not in a funny way, but in a very education and professional way with them. And so that's the opening question that we typically ask with everyone on our initial intakes or initial emails once they've reached out to us, is starting that conversation. Has anybody educated you on the market and why it's where it's at?
Love that. And then where does it sound like? Where's that conversation go? Are you showing that in a total cost analysis with the consumer? Just give us a little more,
Yeah. So what we'll do with that is, as soon as we explain kind of where the market is and what's driven rates up, then we talk with them about where inflation's going and where interest rates should be going based upon all the analysts we follow. We're big proponents of, MBS Highway and Barry Habib and what they do from that aspect. So we're able to use a lot of those data charts to explain to them what's going on with inflation, use real numbers. So it's not just some guy selling them, but it's factual data that they can reference. And then we explain, okay, so now in 12 months, if your payment's lower, how would you feel about this home? Oh, I would feel great about it. Okay, well, now in the short term, here's some ways that we can do that. And I'll go ahead and show a TCA that one of my guys has just done recently in a home. They just closed actually last week. I'll share this with you guys. And this is just a simple 2-1 buy down. Tim King and my team here, it was a new build construction. The bars were having massive payment shock. They said, Martin, we got to have our payment under 4,000. And when we got into this, we explained to them, well, here's where the market's at today. But if we use the concessions and credits that your agent negotiated for you and we do this properly, here's how we can buy it down and get you under that 4,000 that you're looking for. And by doing this, we were able to get them off the fence and start committing. And we explained to them that following the inflation charts and all the data we gave them, that there's about a 90% chance that they will not have this loan in 12 months. I would say almost a 98% chance they won't have it in 2 years. And so when we were able to walk them through with the data and show this to them, it was able to allow people to move off the fence. And this is what this TCA right here, this style of TCA, it's nothing simple. We're just doing the basic 30-year, explaining it up on the headlines and letting them see it face value. This is what's helping us get clients off the fence and moving. But we're also having this conversation with their realtor once we've shown them the TCA and walked their client through, because many times the realtors are the psychologists you might say on the back end after they talk with the lender. And if the realtor's on board and we're on the same page, this is where we're having the greatest amount of success.
And so this particular program, so walk me through. So year one, 4.5. So that's a buy down. Right?
Yeah, this is a 2-1 buy down. Yep. We're just showing here, year one, this is what you should expect for your first 12 payments. This is your total payment right here, right? Year two, if we haven't refinanced this and we still have some of that unused credit, this is going to be what your payment will be. And then if you get to end of year two and you've never done anything with it, rates haven't gone down, this is your absolute worst case scenario. The likelihood is many of them are going to have wage appreciation over the next couple of years, things like that. They're going to improve their financial situation. So it allows people to see a linear kind of sequence of what they can expect worst case scenario. And they know they can get to there, because sometimes right now the payment shock is just too much for them. But during that conversation, we're explaining in the buy down that, in this particular case, the buy down, roughly 2.3% is what we need to make the buy down. We explain that we're going to use about 12 grand of that or 10 grand of that in the first year to offset. And then when we get to that 12, 14, 18 months down the road, whatever's left over is actually allowing them to essentially refinance at the cost of the seller. So they're technically not even paying for that refinance because they have unused funds there. And then we explained at that point in time is when we look at actually buying the rate down further to either get them to this 4.5 or potentially even lower.
So do you ever do it like this? I'm going to share my screen real quick. Do you ever do it like this, where you're showing a program A is no buy down? So you're showing the higher rate. By the way, rates are, like 6.3, 6.4 today, according to Optimal Blue's mortgage market index. And then showing like a 2-1 buy down or a seller credit permanent buy down, and then do column 3, which is sometime in the next 2 years, MBA says rates are going to be at 4.5, and kind of show it this way. Do you ever do it that way?
No, I've just done it the way that I've showed you. This is the way that I found that's worked for our clients. And it seems keeping it very simple with year 1, year 2, and year 3 and linear works for our clients that we work with.
I was just wondering if you had kind of 2 moves. What about rep versus own? Are you guys doing and showing kind of the long-term net worth benefits of a rep versus own?
A lot of our clients that we work with are move-up buyers. We don't get a lot of renters that we're dealing with right now. I'm sure that, gosh, years ago, when I'd say back in 14, 15, when I first started using MortgageCoach, I used rent versus own. One of the things that we will do is I have taught the team to really use the net worth, because a lot of folks who, are affluent, they're not, some of them aren't necessarily worried about the rate, but they're worried about how's this going to affect their net worth. And that's where some of them we've had to use to get off the fence in showing if they bought this house today, how does it affect their net worth when it grows? That's one piece of the MortgageCoach tool that we have used outside of just the simplistic way of year 1, year 2, year 3, or here's option A, B, C, and D. Got it.
And then what about you guys now? You have both Optimal Blue and Simple Nexus. So you are, here, let me pull this up for folks, just so folks know. And if you work for a company that's an enterprise partner of ours, this is just an example of how, Simple Nexus is going from filling out an app starting a spring buying pre-approval, the consumer fills out that app. And I think one of the things I love about this is the consumer is creating the TCA, like
Yeah.
by filling out the app, the total cost analysis is created. And then if you've got Encompass, Optimal Blue, Smart Fees, which I believe you guys do,
Yep.
all of those things are in one place, and you're able to just quickly and efficiently price out that loan. A lot of technology working. Is this something that you do a lot of training and teaching on?
We haven't done the company as a whole does quite a bit of training on there. I know that we use it depending upon when the borrowers will actually come in and fill that out themselves. I know for my team and the LOs in our group, many of them, we've always taught, try and have an intake conversation with them first. Let's get that rapport building going. And so a lot of this is for our team is done on the forefront. So by the time the client's already applied, that many of them have already seen a mortgage coach that they put together to kind of educate the client, walk them through that. And this is just how some of our clients work. Some of them are very apprehensive to just applying and then dealing with what's the rate look like on the back end. We do a lot of relationship building up front with them.
Okay,
and so this is where the TCAs are put in up front.
Cool. And then in terms of database strategies, anything you're doing there, because you guys also have Sales Boomerang, anything you're doing, having a database that's monitored by Sales Boomerang, using MortgageCoach, how are you using that in this market?
Sales Boomerang has been huge for the LOs on my team who, not all of them are the greatest about staying in front of their clients. Let's just be honest. But when we are staying in front of them, we found that we're not getting a lot of those, but when the ones that don't, they're using the Sales Boomerangs to really react quickly to the emails coming in and start that conversation up with the client saying, hey, I'm here to help you with, your mortgaging. I see you had your credit pull. How can we help you? And those are some things that have really allowed some of our LOs to keep some clients that they may be losing elsewhere because they just didn't stay in front of them with their database, whether it be through, direct mail messages or email messages. Not all of us are the greatest. So Sales Boomerang has been a huge tool for us to have in our toolbox to stay in front of those clients who may be going elsewhere.
Cool. I want to tell you some ideas that we're hearing in the market and that we're sharing, and I just want to get your first impressions. So one thing in this purchase market, we're really pushing leaders and loan officers to look at your database beyond just past customers. So one, like as a regional leader, you've got a lot of past customers in the database for loan officers that work for you, but everybody has like orphan leads. The loan officer no longer works with the company, but we have the data, so we can really start treating that differently. And then TBDs, making sure that, and I don't know about you, well, I'll ask you. We're hearing that loan officers have more TBDs, and there is a longer incubation period from the time that we pre-approve it till the time it's in escrow. Like it can take up to a year now. Are you seeing that with your teams?
Yeah, I'm seeing anywhere from 6 months to a year. That's a very accurate statement on the incubation period for TBDs.
Yeah, one thing to keep in mind is, if it's your database, this part, mortgage inquiries, but if it's a TBD, start thinking of those mortgage inquiries as a double app alert. Like, I want to know, and we're finding not everybody is even monitoring their TBDs. What about adopting databases? Do you have any loan officers that are using the fact that, hey, we've got all these tools, we've got this awesome database, getting realtors to let you monitor their database, or getting insurance agents? Is that something you've tried?
I've not tried on the insurance agent piece. I have some agents that we've worked with who I've opened the idea, but I'm finding that in my experience, I'm finding there's a lot of agents who are very protective of that database right now. And we've had a couple where we're doing some they're more traditional in some of the things they've done with direct mail. So we've got that open, but I haven't explored this piece with those guys directly on that, giving us more access to their entire database.
Yeah. Okay. Well, let me know if you try it. I'm always just looking for what's working. So let's close out with just another.
HomeBot is something that we use a lot though with our database. HomeBot is a huge thing. Yeah, actually, it works very well in helping our clients get off the fence and understand where proper why the market's moving where it is and why some homes are selling better than others. So every buyer that we have, we put them in the HomeBot buyers program so they can go and understand, explore the markets, and then also search for homes, because not everyone wants to go through the realtor. But the HomeBot markets is really helping them understand the market score, why homes in one zip code may be selling quicker than homes 2 zip codes over, and it allows them to dig in and get that data so we can come back and have a conversation with them about why they're looking at homes in different areas and how they may be able to negotiate a stronger deal in one. So that is one aspect that we've really been pushing tremendously on, is the HomeBot piece on the front end for our buyers, not just on the back end.
I love that. And I love that data. I love what's working. Another thing we're seeing is that a lot of our cash out alerts are actually turning into purchase transactions. And I mean, it makes kind of sense, because someone that is in that cash out status where they have a lot of tappable equity, but yet they may not, they may not be in a comfortable situation. Their debt's up. They can sell that home, take all their equity out, and then they can pay off all their credit card debt. Even though mortgage rates are up, they're still getting ready they're able to like pay off all that debt and move. Have you noticed any of those? Because you said you do a lot of move up buyers that are.
I have not seen any cash out alerts. So, when we're talking about that, I want to figure out if I'm going to see if maybe there's something that we don't have turned on for our database group.
Okay, well, that's a little follow-up thing. Just know, with a lot of our clients, we're seeing not only are these cash out alerts, they're new loans, but a lot of them are turning into purchases. So it may be an opportunity for you to get that type of an alert.
Yeah, I just did a quick simple search here to see what we've got going on. And the only simple boomerang I have is just if there's I've got a couple of LOs where they've had credit alerts with somebody else, but nothing on the cash out side. So definitely going to need to get it with our digital systems team and see if there's a setting that we're missing here, because I don't want to be missing out if there's a phone call we can proactively make to our clients.
Yeah, well, let me know if I can help on that. And then hopefully these start coming back on again, so as rates go down, you'll start getting alerts, and be sure to notice that it's creating a TCA for you. So when this rate and term alert gets created, the TCA is automatically created. It's like a digital assistant. So if you haven't already, make sure the team is trained up on where that is and how to go from rate and term alert to this. And hopefully that happens sooner rather than later, right?
Yeah, it definitely would want to happen sooner rather than later. That converts into closed loans for us, right?
Yeah. So hey man, any closing thoughts? Anything you want to make sure you share as we wrap this up?
I think the biggest thing I can share with everyone is focus on the disciplines. I mean, right now, the LOs that are succeeding, the realtors that are succeeding, are being disciplined in a very challenging market. I mean, I was kind of talking to my team. It feels like almost like World War I. People on the battlefield, they get up and the realtors and the LOs are running, they're just dropping like flies, but the ones standing around are going to be doing really, really well in 3, 5, 6 months. When the rates start to drop and home buyers start to come out. So be disciplined, stay in front of your database, stay in front of your clients and your leads that are there. Use your mortgage coach, educate them, and really educate your clients on what's happening in the market and why, and that there is a plan. This is not abnormal. I mean, inflation piece is abnormal, but we've seen these ebbs and flows with the market the last 3 years with COVID and so forth have been kind of insulating from us. But I would just say, stay disciplined. Get up every day, stay disciplined. And, one bad day is just one day. It doesn't make your week, doesn't make your month.
Yeah, no, that was a takeaway I had. I interviewed a loan officer yesterday, 5th year in the business. He bought a house when he was 23. He's 28 today. He's got 7, and he closed 20 loans last month. And if you listen to this interview, his name is Andrew Wagner. He's in Baltimore. That was his closing thought. He's just like, I just show up every day, and I'm just consistently doing the right things. And so it was my biggest takeaway from yesterday's interview, and kind of the biggest takeaway from today's interview. So, Martin,
the other thing I would say is there's a common book, Who Moved My Cheese?
Yeah.
Read the book. If you haven't read it, if you feel like your source moved, read the book, Who Moved My Cheese, and go find another source, because that's all that's happening right now. Just be disciplined and go find the next set of cheese.
Yeah. Cheers to that, brother. Well, hey man, I appreciate you. Hopefully anyone watching this, you got value, you got ideas, you got reminders, and look forward to doing more training with you and helping your company turn Mortgage Coach and Sales Boomerang and Trust Engine into a competitive advantage. Thank you so
Likewise.
much.
Thank you, Dave.